Welcome to the Apartment Investor Show, where we help you get smart and invest smarter in multifamily real estate. I'm your host, JC Castillo, founder and managing principal of the Multifamily Property Group. And joining me as always, you know him, Mr. Paul Peebles, national underwriter for Old Capital Lending. Paulie, how are you doing today?
JC, I'm doing great. How are you?
I am doing fantastic. Well, you know, Paulie, the other day, I was reading through my email inbox, and this email just jumped out of the pages and it spoke to me, and it was really timely. And I had to pick up the phone and call our buddy here right away and say, look, we've got to get you on a show, and we have to talk about everything that you just wrote in this email because it is very important. So for all you listeners out there, anybody especially that's doing syndications, that's raising money and putting these apartment deals together, today we're going to talk to you. And we are going to talk about the top 5 things that you must remember when you're raising money for a syndication. And these things, I can't express how important they are. As Paulie likes to say, we want to keep all you people out of jail. So today you need to tune in for that reason alone, because I'm sure all of you probably don't want to end up in jail. So we've got a really fabulous guest. Paulie, why don't we let you introduce our guest today?
So I've known Mauricio for probably a number of years. I think I first met him at a real estate guys seminar back about 4 or 5 years ago. He was up on stage, and I really enjoyed what he was talking about. It kind of struck a chord with me of trying to keep people out of jail and trying to get people to do the right things about raising money. So, he is an attorney. He specializes in private placement memorandums, but he's really a friend of yours. At least he should be a friend of yours. And he's a guy that is very knowledgeable about putting together equity into these transactions. And so, I will bring 75 to 80% of the money. And so I should be your best friend. But getting the equity in, that's really the challenge for some of these investing groups. And so our friend in the podcast today is Mauricio. So Mauricio, thanks for joining us. We appreciate that, and thanks for spending some time and trying to keep us out of jail. So thanks.
No, hey, thanks for having me. Really appreciate it. Honored to be invited by you guys, and looking forward to adding some value.
Absolutely, Mauricio. Well, let's get right down to it. People out there want to know, how are they going to stay out of jail? So tell us a little bit about sort of these 5 ways that you wrote about and that you're speaking about, and why they're so important for these syndication people to pay attention to.
Yeah, so this is, I'm actually starting to call this an epidemic, and it has to do with when people are raising capital, raising money, getting that 20%, because your buddy Paul over here is going to get you the other 80. When you bring in investors, it's very what's the word I'm looking for? It's very tempting to bring co-sponsors in to just raise money for you. We affectionately call them money raisers, and back in the day, and when I joke back in the day, this is like 2 or 3 years ago, I was seeing syndications where you had 1 or 2 people involved in the syndication, maybe 3 if you had somebody that was boots on the ground. But these days I'm seeing 5, 6, 7, 10 syndicators per deal. And the only reason you have that many is because they're brought in to specifically raise the money. And people are doing it without realizing that they're violating sort of the number 1 rule, which is you cannot pay somebody to raise money for you unless they are a licensed broker-dealer. Again, you cannot pay somebody to raise money for you unless they're a licensed broker-dealer. And I found that most people don't know this. It's not like they're purposefully bending the rules or breaking the rules. They just don't know, because I will flat out ask them in our calls, hey, what is this person doing? Or why are they getting 10% or 20% of the GP? And they'll just tell me they're bringing in the money. And I tell them they can't do that unless they're licensed. So that's kind of the number 1 big thing, that you've got to realize, that you cannot compensate somebody for raising money unless they're a licensed broker-dealer.
Well, that's really important. And, I think, Mauricio, you hit the nail on the head, especially when I read your email and you talked about the idea that, everything is hunky-dory until there's a hitch in the economy. And when people start losing money, that's when these things really come to bear. And so I think what's really key here is people have to understand that if you're not playing by the Securities and Exchange rules and the guidelines that are set in place, if something happens to the economy and if something happens to your deal, there will be a time when they will come after you and ask questions. And if you don't have your ducks in a row, it's going to be a big problem. So I think it's really good timing that we're having this discussion. So let's talk about it. What's a second way that people should be concerned about?
Well, once you realize, number one, the second thing you have to realize is the minute you pay somebody what's called transaction-based compensation, and I'll get to that in a second, but when you pay somebody transaction-based compensation, you are done. End of story, end of conversation, full stop, whatever you want to call it. That is a hallmark sign of being a broker-dealer. And transaction-based compensation simply means you're getting paid based on the amount of money you're bringing in. It can be a straight commission, like, hey, I'll pay you 3% or 5%. And by the way, you've got to realize we're not talking just cash, right? Compensation is compensation. So it could be shares in the company, which it typically is. So just because you're giving somebody shares of your GP, as we like to say, that doesn't mean that you're not compensating them. You just happen to compensate them in the form of GPs as opposed to cash, but it's compensation nonetheless. So what I see people saying, look, if you bring in X amount of money, I'm going to give you X percent of the GP. But if you bring in more, I'm going to give you more percentage of the GP. That's classic transaction-based compensation. And you are absolutely becoming, basically you are acting like a broker-dealer without a license. And by the way, JC, that causes two problems. On the person raising the money, which to be honest with you, I don't care as much because I usually represent the syndicator, but that person is obviously acting without a license. And just like you can't practice medicine without a license or be a lawyer without a license or be a real estate broker without a license, you can't do broker-dealer. And so the penalty there is typically disgorgement. You've got to return the commissions and, what have you. That's kind of half of it. But what I'm really concerned about as the syndicator is you're not disclosing that to your investors, right? You're not disclosing the fact that you're paying somebody a commission or you're paying somebody transaction-based compensation to this individual, and therefore you are engaged in an illegal offering because that was something that you absolutely should be disclosing.
Let's talk about that a little bit because, all boats have risen recently in the last, say, 7 or 8 years, and everybody's who's been in multifamily has made money. And let's just go to the darker place. Let's say a year from now, 2 years from now, the economy is not so good. Rents do not continue to go up on that magical staircase to the sky. And that you need to start putting money back into these properties, and you may need to have capital calls made to your limited partners. And it only takes is one limited partner in there to have a conversation with somebody that put money into the deal that was maybe compensated. And so I just remember back in the early 2000s when the internet stocks busted and then everybody said, well, you put money into, they sued a bunch of the broker dealers, said you put my hard-earned money into these speculative transactions and I'm going to sue you in the deal. I see a lot of these attorneys coming up here when we have a soft economy saying, hey, listen, I will work for free for compensation in the future. So I think it's very important to set the platform correctly and not find yourself 2 years from now or 18 months from now or even 5 years from now having a problem. But let's talk a little bit about who is the whistleblower in this deal? Who is it the securities firm, security groups for the individual states? Are they the ones that are going to be responsible? Or is it the SEC that's going to come in and start challenging these deals? Who's responsible for making sure?
Yeah, great question. So look, as long as everything's going great, you have that golden deal defense, everybody's happy, nobody's going to complain, everything's fine. But the minute, as you said, things start to go, they don't even have to go south. Like as you mentioned, as soon as rents don't increase at this pace that they're underwritten at and things, the bottom line is somebody is going to complain. That's the point where you get into trouble. Is an investor isn't happy. Doesn't mean they're even losing money. They may just be not getting the returns that they expected. But what happens is they pick up the phone and they place a call either to the SEC or their state regulator. Now, I would expect it to be the state regulator. So the SEC, they're kind of understaffed. They're looking for Bernie Madoffs. I'm not saying the SEC wouldn't get involved, but it's most likely going to be the state. So whatever state you live in, they're going to pick up the phone, they're going to make a complaint, and that's going to open up what's called an audit. And they're going to open up a file and they're going to contact the sponsors and they're going to ask for all the documentation and they're going to start asking for names of your investors and they're going to start interviewing the investors and they're going to get to the bottom of this. And anything that they can find that you did illegally is going to come back to haunt you, whether it's raising money raisers or maybe it's advertising, the social media thing, which is a different topic. But that's when all of this thing is going to come to fruition. And, and trust me, the investor is not going to be on your side at this point, right? Even though, oh, they're all friends of mine. But look, they've lost money. When they ask you, hey, how did you find out about this person? They're going to be like, hey, it was Johnny who recommended me, and that's how I found this deal. And they're going to be able to track it down. And from a state regulator standpoint, or even the SEC, they're going to then nail you for a failure to disclose and making an illegal broker-dealer payment. And the penalty for that, by the way, at a minimum, the penalty for that is going to be, number one, restitution. It's a rescission right of the investor. So even though it may have not even been your fault that they lost the money, it was just an economic downturn, you couldn't get a refinance, what have you, it doesn't matter. You're going to be on the hook to return the entire amount of money that you raised, plus penalties. And then depending on how severity, I mean, you do have the chance of getting some criminal, but most likely it's going to be a rescission. So now you're faced with, hey, I raised $3 million or $5 million. Now you got to come up with $5 million that's all gone down the drain, and you're probably looking at bankruptcy and not being able to raise money.
If you took money in from IRA accounts, you run the risk of ERISA problems too. That's
a great point. I actually hadn't thought of it that way, but yeah, absolutely. You're dealing with IRA funds, and that's all ERISA related, correct?
So let's keep walking down, and we got number 1, number 2. What's number 3?
Number 3 would be, just because you're not paying somebody transaction-based compensation doesn't mean you're in the clear. Doesn't mean you're good. It just means you get to go to the next level of analysis, right? So you still cannot compensate someone. Maybe that's number 4. I always get 3 and 4 merged up. You still cannot compensate somebody for purely raising money, right? And that's kind of number 4. Just because it's not transaction-based doesn't mean you get to say, hey, I'm not paying them a commission. I'm good. You're not good. You just get to go to the next stage and enter into the next analysis, which we can do next. And the next analysis, I guess, let's get to it, is the person that's raising the money. I don't even want to say that. The person you're bringing in kind of as a co-sponsor, which is really what you're trying to do. You bring them in as a co-sponsor. They need to be a legitimate co-sponsor. Okay, they cannot be just somebody that comes in and raises money. They've got to be doing everything that you are doing: underwriting, due diligence, talking to the lawyers, traveling to the property, asset management, everything that you are doing in that syndication world. They need to be doing a piece of it. They don't have to be doing the same amount of work, obviously. I mean, if they're only a 10% GP, then you're not expected to work the same amount or do the same amount of things, but it has to be commensurate with the amount of stuff. And under the statute that we look at, and I don't want to get too technical, but there's really 2 things the 2 words that pop out in the statute to me are substantial, meaning they have to be doing substantial work, and maybe more importantly, primary, meaning their primary responsibility needs to be something other than raising money. Again, any of those things that I just mentioned. If you're sitting in front of a regulator and the regulator asks you, hey, you gave Johnny, or Johnny, I see Johnny owns 10% of the GP. I didn't see any money go in there for that 10%. What did Johnny do for that 10%? Your answer cannot be, he helped me raise money, right? It has to be something else. He did A, B, C, D. And not only are you telling them A, B, C, D, he actually has to have done those things, right? A lot of people get caught up in the documentation and, no, he's doing A, B, C, D. When the rubber meets the road, it's going to be your burden to prove that Johnny did all these things. And so you want to keep records. And, again, if they're doing, look, it'd be great if you can show that they've got airplane tickets because they flew down to Oklahoma City or wherever the property is and walked the property, or they worked on the spreadsheets for the underwriting, or whatever it is that they're doing. It's going to be your burden to prove that they did that.
Such an interesting analysis here. And I think one of the things that I enjoyed, Mauricio, is that you also have a YouTube channel where you post content as well. And you actually spoke even further on this topic about people that are putting sort of what we would call contracts in place to make it seem like they have are putting labor into the deal aside from just bringing money in. Maybe you can talk a little bit about that, because that was really interesting that I heard you speak about on the video.
So it's not uncommon for people to try and hide this kind of commission. I call it kind of a disguised commission, and they call it something like a consulting agreement or a marketing agreement. It's like, no, I wasn't paid to go raise money. I was paid for consulting services or marketing services. And again, the SEC doesn't care, or the states don't care what you call it, how you structure it. They're going to look straight through that. And if you're claiming, let's take the marketing, for example, it's probably easy. Hey, if you're claiming that you entered into some kind of a marketing agreement and therefore the 50,000 or whatever, maybe shares the GP were in exchange for those services, fine. You better have a marketing agreement in place, number one, and you better list out all the things you're doing in that marketing agreement in exchange for that compensation. And then you better be doing all those things, right? Same with consulting agreement. You know, you're going to have to prove that you did the consulting, you know, phone records, taking notes of your meetings. I mean, you're going to have to show that you actually did some consulting in exchange, and it's got to be reasonable, right? I was not laugh, but I always think of the folks who say, hey, well, I'm doing investor relations, for example. And, you know, they end up getting paid like $300,000-400,000. And I'm like, you can get an investor relations guy for like $60,000 a year. Like, why are you getting 300? That doesn't add up, right? The story has to add up. And, you know, if it's look, I've come across legitimate marketing companies that will, for a flat fee of 12, 15 grand, they will do all this work. They'll put together the business plan. They'll work your social media. And they get paid 15 grand whether you raise a dime or not. It's the other thing where people are blatantly violating the law, and then they're trying to somehow stick their facts within the law, and they say, well, how can I couch this so it fits into this rule? And I think that's where you have the problem, because they're just basically trying to get around the rules, and they're trying to come up with facts to justify what they're doing, when ultimately what they're doing is raising money.
So it sounds like what you're basically saying is, hey, if 2 people or 3 people or 4 people are going to come together to actually do a syndication, then they really need to have a legitimate role in the deal. If we you know, we talked about the 5 things to watch out for to keep yourself out of jail, but on the flip side, what you really want to do is you want to form a real partnership, a true partnership where everybody is pulling their weight and doing real stuff for a syndication. And that's really the way to go with these types of things, right?
Yeah. And it's all, you know, unfortunately, it's all what we call facts and circumstances, right? There's no black and white answer. And so you're kind of looking at all the facts are in your favor. But look, this will be a good example on real quick here. I'll give me 20 seconds here. If, let's say you and your partner are doing a syndication together, and you're doing every single deal together, kind of you're doing 3 or 4 of these syndications over the next couple of years together, that's one thing, right? But if you've got one money raiser who's doing 7 different sponsors, and they go to one sponsorship team and they raise money, and they go to another one, they end up with 7 different sponsorships. That's a different set of facts, right? And that's not something that's going to look good when, you know, they're coming in just for one deal. They just happen to raise most of the money, and then they're on to the next syndication group and raising money for somebody else. And so these are all facts and circumstances, which is really why you want to be working with an attorney who understands this and can kind of weigh those positive and negative facts, and then come to determination whether what they're doing really is sufficient enough to be considered a genuine and a legitimate co-sponsor in your deal.
Can we just pull out a little bit and talk about advertising? I mean, I go into Facebook or I go on to LinkedIn, and I tell you, every syndicator is out there preaching their next deal that's coming out. And of course, in the fine print, and only accredited investors should open up this.
Should see, yeah, hide your eyes if you're not an accredited
hide your
investor.
eyes if you're not an accredited investor. I think that's the wackiest thing. And I'm like, how is that legal to do something like that? I mean, yeah. So what's your 2 cents on that?
It's not. Assuming it all depends on what exemption you're relying on. Obviously, we didn't get a chance to get into that. But if your exemption prohibits advertising, most of the syndicators out here are doing what we call a 506B as in boy, and that prohibits advertising. And social media is an advertising platform. So is your website, by the way. Your website's being blasted to the world unless it's password protected. So if you're doing a 506B, you cannot really use social media. And this has also become kind of my second epidemic. So it's right behind raising money for others, it's advertising on social media. I actually ended up putting a social media video series on this because it was another thing. But I basically put it into buckets, and I said, look, you clearly cannot advertise your deal. And I think most people understand that. But what most people don't understand is that the definition of an offer and advertising is really broad, and it includes what's called conditioning the market. So anytime you're on Facebook drumming up excitement about your deal, even if you're not talking about it specifically, just getting excited, talking about your past returns or how awesome this building is, even though you're not talking about the offering, that's going to be considered, or potentially, and I think those will be considered advertising, and you would be in violation of your 506B exemption, which means you can't rely on that exemption anymore. So you better find a new exemption, and if you can't, you've done an illegal offering because you haven't registered your syndication. So the way my brain works is I like to compartmentalize it. And so what I did in this video thing I did is I said, look, these are clearly the things you can do. Here are clearly the things you cannot do. And then the middle is always the gray area, in terms of kind of like maybe, maybe not. But the gist of it, or the sort of my conclusion in all this is I would stay away from social media. other than pure educational value add stuff, right? I mean, if you want to go on there and put a report together as to, why real estate is the greatest wealth vehicle in the history of mankind, and in exchange for that report that has nothing to do with your stuff, you get an email address, an email contact from that, great. If you want to talk about why, Dallas, Texas is the greatest market to go into, and you do a report on that, that's great. But keep in mind, next step, you can't go out and then solicit those investors right away. You have to establish what's called a substantive pre-existing relationship with them. And that's another 7 steps that maybe some of the time we can go through, but there's a step-by-step process that you need to follow to go from a complete stranger that you've obtained them from social media legally all the way to establishing a substantive relationship with them, at which point you can offer them a future deal, because you have to have a pre-existing substantive relationship, and that means pre-existing the offering.
So what I like about Mauricio is because he's an attorney, he can help you. And I think he can go over your social media websites and go over some of the marketing materials, collateral that you've built, and tell you this is good, this is not good, don't do this, under the theme of keeping you out of jail. So I know that's one of the services that you do. So I know that a lot of people are very appreciative about how you step up, and you definitely help some of these general partners, and especially helping up with the limited partners about, over disclosing always helps, and it doesn't get people into jail.
Yeah, absolutely. I'm happy
Absolutely.
to do it.
And Mauricio, if people want to get a hold of you, because I completely agree with Paul, and that's the reason we have you on here, because you are an expert at what you do. I mean, how can somebody reach out if they want to talk to you and get support from you on the on these types of things?
Since there's several ways you can get a hold of me, but since you mentioned the social media stuff, if you want to email me at social@premierlawgroup.net, social@premierlawgroup.net, not only will you get a hold of me, but I'll also kind of automatically send you this 5-part video series I did on, how to use social media to raise money legally. So that's probably a good way to get a hold of me, given the topic we just discussed today.
Well, that is awesome.
That's great. Now, JC, if somebody wanted to get a hold of you, what's the best way to do it? And let people know what do you do?
What do we do? Well, first of all, we have fun with our video podcast here, and we love to educate people. Our company, Multifamily Property Group, we've been around since 2006, and we have literally been helping investors make smart multifamily decisions for the last 13 years. We've bought and sold a ton of multifamily properties over the lifetime of the company. And we are always willing and able to sit down with anybody for a free 15-minute consultation if they want to know anything about investing. So we encourage people to reach out to us. They can go to our website, multifamilypropertygroup.com. Again, multifamilypropertygroup.com. They can go to the contact us page, and they can click on consultation, and we would be happy to have a consultation.
That's great. And so if you want to see Mauricio more, I think we'll have him on in a future podcast. But if you can't wait, come to Texas. Come to the Old Capitol Multifamily Conference, October 24th and 25th. We're fortunate that Mauricio made some time in his schedule to come to Texas to spend some time with you. So make sure that you get him on your calendar to pull him away just for a few minutes to build a relationship with Mauricio, because if you're thinking about raising money, you want to do it the right way, and you need some help. If this is not what you do, you're an engineer, you do something else, but this is not what you do. You want to learn from the experts and keep yourself out of jail. So go to the oldcapitalpodcast.com, and reserve your opportunity to come to Texas and see us October 24th and 25th. So we appreciate that. Mauricio, thanks for coming in the podcast. We appreciate that. JC, always a pleasure. I'm Paul Peebles. Have a great day.
Take care.